and welcome to the Market Rag for Tuesday, December 11th, 2007. It was a bloodbath out there, people. The Fed came out, cut the interest rates. Everyone was kind of expecting that, but the market did not like it at all. You can see the bloodshed out here. The Dow down 300 points, the NASDAQ down 60. You know, coming over here to our percentages, these are all over 2%. That's a pretty massive move, you guys. And again, the market did not like the news today. As we come down to our broad market and commodities area, these were all green the other day, and we've gone into the middle of the range. Again, a lot of yellow out here. We're still in the middle of that range we've been dealing with for the last couple months. So this move down, again, just took us away from the top and closer to the bottom. You can see the euro and the oil are still down in their lower end of the ranges. The bonds had a great bounce today. And the large caps and mid caps are hanging in there a little tougher than the small caps. But look at this red here. These small caps are out of favor, so I would expect a bigger move down in this area. Looking at the S&P, again, massive percent, down over 2.5. Big move down. You'll see how it kind of broke the high, and then the sell-off started right after the Fed hit. They had the markets up by the highs, and then when this happened, again, a full bloodbath. You'll see it took away several days worth of climbing. Bonds put in a big rebound off this support line. We'll just see if it can stay above there. As we come over and study our sectors, again, a lot of yellow. The main areas I'd want you to watch here are still your semis, which historically have been doing really bad, along with your financials and your consumer discretionary. In this group, your big hits today were the energy area, materials, and the transports. On the upside, telecom's the only one that kind of hung in there, and you can see that with a little bit of green here during this short-term cycle. Looking at finance, you'll see we just got above this support area, but today has brought us back underneath it. A very similar situation with the healthcare area. We had ourselves above that line in the sand, and today's dropped us back under it. The consumer discretionary gapped up this morning, hung around this resistance area, and sold off hard as the news hit the market. We got stopped out of quite a few trades today. CRS was one of them. We had our stop right under this low, and look at that big sell-off, but we did keep part of this money. Our CSIQ trade, we booked half of it as it broke this low. We still have half our position, so I'm going to wait a few days and kind of see what this market wants to do. Looking over the portfolio, we were a bit asking for trouble. We had over 40% of our account long, and with what happened today, that was not the position to be in. So we got stopped out of a few longs and took some profits. We also took two new shorts, the JCOM and Dish short. Looking at our current situation, we've got about 17% long and about 14% short. So we're basically hedged here. 31% of what we're allowed is now at risk. This is all in the shorts we were triggered into today. We are up a little bit on the closing R rating, so we're not in a bad situation. We just gave up a lot of paper profits today, and that's part of trading. I saw some money vanish pretty quick out there. I'm going to go ahead and stay neutral and rate this market at a 0 for the time being. There's always the chance of a big rebound move after the market digests the information this evening. What I want to do is I'm going to hold off on placing any new positions until after tomorrow. I kind of want to see how the market acts and takes the news after it has a chance to sleep on it. You guys have a great evening.